Hello, wonderful people. So we are Team ER from KNUST, and today we are pitching on Guinness Ghana PLC. We are recommending to a stock investor to look every note to get Guinness Ghana stock to buy, because we are targeting a long-term price at 362 pesos, which is a 47.28% on the upside of the current share price, 265 pesos. With our investment summary, we are recommending to you to buy Guinness Ghana because Guinness Ghana can boost up a strong brand and a large market share. Guinness Ghana Limited is a well-established leader in the manufacture and sale of beverages and is able to leverage on its large market share of 59.28% of the entire market to further grow. Their combined market share growth rate stands at a whopping 0.5% year on year. Again, they can also boast of stellar financial performance. It has a solid balance sheet backed by revenue, EBITDA, and profitability increasing over the past 5 years, beating analyst estimates and that of competitors. Again, they can also boast of highly experienced board members. They have the air to lower their governance risk, and that have been providing their board members with top-notch capacity training. Besides, the recent addition of Mr. Abikowan and Mrs. Ngozi Agoni, with almost 20 years FMCG's talent track record, have further solidified the board. With all these, we recommend a strong buy for Guinness Ghana stocks. Guinness Ghana Limited is a Ghanaian brewery active in the beverage industry. It is a subsidiary of the Amsterdam-based spirit manufacturer, Diageo Islands Holding BV. It was formed in the year 1991 with headquarters at Kasi Kumasi. Principal business activities include the manufacture, distribution and sale of alcoholic and non-alcoholic beverages, as well as their ancillary products. You might have seen some of these brands on the market. With the year-to-date share price history, you see that Guinness Ghana have managed to increase their share price by a whopping 13.9% year-to-date. That's good for the growth investor. You see that they are currently trading at the price of 265 pesos with their market cap of 631 million Ghana cedis. Adjusting for debt and cash, you get a total enterprise value of 762 million Ghana cedis. Their 3-year revenue growth rate stands at a whopping 22.5% with a 3-year average EPS of 143.8%. That's good for the value investor as well. You can see that although their revenue growth fell in 2020 after they were impacted by the COVID-19, they have managed to increase it in the last 12 months by a whopping 13 times the previous 4, which shows their edge for growth is quite phenomenal. You can see that their compounded annual growth rate of revenue stands at a whopping 72.3%, and this shows that even with increased prices, consumers are willing to pay premium prices for Guinness Ghana Limited offerings. With the market and economy analysis, you can see that the GSE Composite Index experienced a fall of 11.8% year to date. Meanwhile, Guinness Ghana Limited is the second best performing stock in its industry. To the economy, you see that the Ghana cedi have been plummeting swiftly against the middle world currencies. It lost 45.1% against the US dollar in just 2022. Ghana's annual inflation rate has rated to a whopping 50.3% in November 2022. Ghana's economy expanded by 5.4% from a year earlier in 2021. It is expected to be 3.7% by the end of the quarter. What's the implication here? You will see that with the unfavorable exchange rate as well as rising inflationary pressure, this will continue to fund boost costs, which will cause firms to increase their selling prices, thereby reducing demand. With our investment thesis high, we are saying that Guinness Ghana performance for the stock investor have been impressive. You will see that even in 2020, where they were impacted by COVID-19, they were still able to retain 4% onto their equity holders. Besides, they were also able to pay dividend of 1.3%. Notwithstanding all this, they have able to increase their retained earnings year on year, which shows that their financial health is a good one. With our multi-scenario revenue forecast, we see that even in a bad case scenario, that is in a situation where revenue growth rate have been falling, Guinness Ghana was still able to reach the 700 million Ghana cedis gap, which will be able to cover their 5-year average total expenses of 684 million Ghana cedis, leaving a whopping 16 million Ghana cedis for expansionary project as well as dividend payments. We will see that cost of goods sold is high. This we believe poses no risk to the stock investor. This is because they have changed their reporting style and now they add excess duties to their cost of goods sold, which have inflated their cost of goods sold by a whopping 16.5%. You can see from the profitability metric that EBITDA, gross profit, and net operating profit after tax have been on the upward trajectory for the past 5 years. Adjusted EPS have been one of the best in the industry. You can't move on. Investment is the thing. Guinness Ghana, although they have been struggling with stabilizing their liquidity ratios, This we believe poses no risk to the stock investor. This is because Diageo Finance PLC, the finance angle of the mother company, is willing to provide their liquidity needs at low cost and with soft loan terms. Even with that, benchmarking Guinness Ghana against the industry average, you will see that it has the lowest share price, and even with that, their 3-year revenue growth rate beats that of the industry by whooping 1.2%. Their operating margin beats that of the industry by whooping 2%. Their dividend yield beats that of the market by 0.5 times, which shows clearly that they are undervalued. With our valuations assumptions, we use the 5-year government of Ghana bond yield adjusted for the default spread to get a risk-free rate. We use Guinness beta of 0.1, and with that we are able to calculate our cost of equity. For calculating the cost of debt, we use the average lending rate adjusted for the corporate tax rate of 25%, and now we get the cost of debt. In sum, we are able to arrive at a weighted average cost of capital of 16.32%. Our long-term growth rate, we assume 3%. Our revenue forecast, we use historical 5-year average for revenue growth, and the tax rate, we use Guinness Ghana effective tax rate of 25%, and we added 5%. With that, we are able to achieve our valuation model using the discounted cash flow model. With the valuation model breakdown, we see that we expect revenue to fall in 2022, and we expect it to increase steadily up to 2026. Cost of goods sold, we expect it to take the chunk of revenue. And with all these things, we are able to project a free cash flow with it being higher in 2022, and then it fall in 2023, then it starts to rise steadily up to 2026, which is good for the investor. With all this, we are able to arrive at an enterprise value where we are adjusted for cash and debt to get equity value. Dividing it by the shares outstanding, we got an implied share price of 362 pesos, which is 47.28% on the upside. You can see from the sensitivity analysis that even in a case where Guinness Ghana is not able to grow, their lowest share price is 2 cedis, 22 pesos, which still surpasses that of the current market share price of 2 cedis, 5 pesos.
So, ladies and gentlemen, if you have found Guinness Ghana stock, please hold it. But if you don't have it, I recommend that you should buy now. Why? Because if you check the revenue growth of the industry, you realize that Guinness Ghana has been able to beat the industry. Now, looking at that, they have a very good price leadership, which means they have a very large share of the market. Now, with that, they are able to raise a lot of revenue, and you can see that streak within the last 2 years. And then they have liquidity assistance in case of any liquidity issues. The Global Finance is there to sort that out. And then there is the riskier government bonds as well. It's also a good reason why you should buy Guinness Ghana stock, because in the next year we are actually expecting that the market will not be favorable for you to buy the government of Ghana stocks. And then Guinness Ghana has poised itself in the best position for you to be able to buy stocks with them that will be able to increase. Now, to the risk and mitigants, we are seeing that they have been able to cover everything over there. When you talk about the tax revisions and then the rising inflation rates, the company has the experts to be able to deliver when it comes to building these solutions. Next.
Now, with all this being said, Guinness Ghana has represent the true core values of the FMG industry. It has averaged annual rate, I think, of 5.7%, pre-COVID era 5.1%, post-COVID era, and it has a very high cash conversion cycle. So I think the 9 days minimum, the 15 days average, and the 21 days maximum. Guaranteeing use for money. Now with the power, now with the industrial analysis, we will do what is 5 forces. Now we said the power supply is very low cost. We think that in this kind of, I think, we can source 80% of what is in their end product. Then with that, I think the competitive rivalry will be really high. But notwithstanding that, I think they dominate 60% of the market value. And I think they account for it, I think 0.5 year-on-year growth. And the power buyers will consider it very moderate. They have other partners with foreign American. This is a solid ground. With all this being said, Guinness Ghana will promise to be a capital appreciation and keep paying none by pound out in the industry. And I'm guaranteeing this one for this.
So with all things here, we are saying that you should buy the Guinness because of their dividend payments, their capital appreciation, and also the riskier government of Ghana bonds, which will affect you, the investor. Thank you.
So I see a risk-free rate of 15%, which instrument is this? Which risk-free rates are we talking about?
We use the 5-year which is we adjusted for the first one, which is 5.75%. That's when you invest
In your valuation, when you say risk-free rates, do you think the current economy makes government bond a risk-free rate?
With regards to the treasury bills, even though they have been a delay, we can guarantee 80% rate on that. Definitely, they are gathered and they won't be paying it.
But your valuation, you use government bonds. I'm asking between treasury bills and government bonds, which one is much risky? Why do you use government
decided by all means, the government will still pay their interest to their investors.
Are you aware of the debt exchange program? You need to declare they are not going to do any coupons. So to use government bond as your RF, I don't think is right in your valuation. You have used the treasury bill rates as your experience. And your beta, is that a stock quota for oil? So, how do you
So, the financials, looking at the companies, which of these, if we quarterly or, the figures, these 3 years, and you are saying, what was the last time this is going to pay
This year, actually.
and after last year, what was the last time they paid?
For the past 5 years, they need to pay dividends. It was only last year, year 2022, that dividend wasn't paid. That was churned out into capital expenditure for next year. We've invested in some farms in our West regions that are going to turn into capital expenditure. So that's why it's dividends were. But for the past 5 years, consistently, dividends were.
So for the long view of evaluation, the growth rate is supposed to be 3%. So it is 3%. Why are you still? Is it good enough?
We checked on and the expected GDP growth rate is 5% for next year and beyond. And with that, we didn't want to be overly confident, so we decided to reduce it to 3%, which is fine as being conservative.
back to cost of equity? You know, cost of equity is also the required rate of return for investors. So if you arrive at cost of equity at 16.36%, what is the current treasury rate? Don't you think investors are comfortable to buy treasury bills and investing in this Ghana? Because it is giving them a higher return than what Guinness Ghana is going to give.
So, buying Guinness Ghana, okay, the main reason why I personally buy Guinness Ghana is because we've actually prepared for next year. It's as though the company knew what was going to happen in 2023 and they've put in a lot of resources to actually see it. Now when you look at the market cap of Guinness Ghana, comparing it to the industry, we have a very large market cap, which actually shows that investors are actually interested in Guinness Ghana stock. But then, when you look at it, you see that the share pattern has been really undervalued. So, when you compare that to buying treasury bills, of course, we know what's happening in the sector in terms of the government and everything. But then, if you want more money for what the money that you have, it will be good for you to go for a defensive stock and use it. That is why.
And you said treasury bills, more guarantee or more return. Guinness Ghana is what we call maybe lower preferences. Because we can strategy in those kinds of products. People who prefer sales, who prefer homes rather to prefer. So if you prefer homes, you can approach what you guarantee.
Adding to that, you see that the fund managers mostly portion their investment. So the stock side or the equity side or the equity portion of their investment, we are that it is Guinness Ghana. That's what we are saying.